I welcome you guys to this webinar we are having on market profile, the options market, and the order flow. Now, the goal of today is to look at where we are in terms of market structure. So we're going to be talking to you about where we began a new series of September. So there is going to be definitely actionable points for us to trade out of from Monday. We're going to be looking at what the market can do through the month of September. Then we're going to be talking to you a little bit more about technical aspects of how you can best organize the information and make it a comfortable user experience for you when you trade. And then finally, we're going to be talking about order flow. And I'm going to be talking to you about the basic things which you have to remember when you are looking at an order flow chart. Now, the purpose of today's session is simply to organize the information which is coming to us on the screens, which the market is giving us, and to be able to monetize this information for us. So we'll begin with the market structure. We'll have an understanding about what the rest of the market is also doing. That's what we call the sentiment analysis. And for us at VTrender, sentiment is best expressed by understanding positions of other traders in the market. So, right. So structure is what we look at in terms of the market profile. Sentiment analysis we do by understanding the inventory or the holding or the positions of other traders in the market. And the options market is the best illustration of where we can see all of that. And then, we look at the order flow. And in the order flow, it's the closest which you can get to understanding the demand and supply of the market. So on your screen right now is you got these series of numbers. Now these are in terms of number of lots, but what do they tell you? They tell you where the market was buying the option, this particular instrument, and where it was selling, right? So the greens on your right hand side would be the buyers, the reds would be the sellers, and as a whole, as a collective, they tell us everything we need to know about the demand and the supply math of the market, the demand and supply. There is nothing else to the market except demand and supply. So once we get closer to understanding the demand and supply of the market, there is no need of anything else, right? So we'll walk you through what we are going to be expecting through the month of September in the markets. I'm going to be joined by my colleagues Uttam and Suyog. Uttam is going to give us the bigger picture of what to expect from the market through the month of September. He's going to break down the market for you. And then Suyog is going to come up. He's going to explain to us about how we can best use this interface to make a large-scale improvement in the way we do our tradings. And then I'm going to bring up the end, and I'm going to be talking to you about order flow. So stay with us through the session. There's going to be a lot of inputs we're going to be sharing. If you've got a notepad or anything you feel that you need to jot down, please do so. We're going to be opening the session up to Q&A at the close. So if you feel you have any questions midway also, just jot them out somewhere. We'll answer all of these questions later on in the program, right? So we are good to go. I'll invite Uttam to talk us through about where we are placed today, the auction. For us, an auction is the flow of the market. The auction is basically a process between buyers and sellers and is what makes prices move. So Uttam is going to come in and he's going to be talking to us about the current auction and what is to be expected for September. And he's going to break down the market for us, right? So stay tuned, Uttam up.
Thank you, Shai. Thank you. Good morning, everyone. Am I audible? It's a nice, lovely Saturday morning. Good morning. Hope I'm audible. Voice is clear. Thank you, guys. Thank you and welcome to this webinar. It's a good way to start the weekend and Saturday. So as you all must be aware, at VTrender, we have this three things which we use for taking trades. The first one is the market profile. Market profile is we use to understand the market structure, and we use market profile because we have we have a three-dimensional view of the markets. It involves time, price, and as well as volume. So market profile is our base to understand the structure. And then we have the option segment where we look at the OI, which helps us to understand the sentiment of the market, how the big players are positioned, and if any movement in the market is going to force them to change their inventory. So that we can make out by looking at the option inventory, which is there in the wonderful option advanced option charts we have in the chart section. And the third thing is the order flow. Order flow helps us to know the pulse of the market, and it helps us in executing the trades. We know the structure of the market using market profile. We get important references using market profile, and then we what happens at those references, we watch order flow and then take actionable trades. So that is what we do at WeTrender. And I would like to talk about how we use market profile to understand the structure. As a we use the top to bottom approach. We look at the monthly time. Although we are taking trades on the 3-minute order flow chart, we start from the monthly. We look at the monthly charts. We look at market profile charts of the monthly spot index and see what it is doing on the monthly time frame. Then we come down to the weekly time frame, and then finally the daily time frame. So I'll just hello. Yeah, yes, Suyog.
Can you please share your screen?
Yeah, I was just about to share the screen.
Okay.
So I'll just let me just share the screen. I'll also show how it helps us to be aware. I hope all of you can see my screen. We have these reports which go out on the website under the forum section. So what we do, as I said, we look at the monthly, then the weekly, then the daily. So we have these monthly reports which go out where we look at what has happened in the previous month, what the structure of the previous month is, and what we can expect going forward. And we also make a note of important levels for the month. So we have a brief write-up which explains the auction part, and then we have these important levels, which is the monthly zones. So these are very important levels which we take forward as and when a new series is starting. So when the July month ended, we had these references with us. The VWAP of the July series, the July month as such was I'll just share the monthly chart. These are the monthly market profile charts. I've changed the TPO size so that they can fit on screen. Yeah, so I hope you guys can see my cursor. It is on the July monthly chart, which I have split. When I split the chart, it is showing me a daily chart. Each day is one TPO. Just like on the daily chart, we have every 30 minutes as a TPO. On the monthly chart, we have each day as the TPO. So what it helps us to understand is what is happening on the larger time frame. So as I said, we have these reports handy with us, and we make note of these references. So when we started, for example, when we started the July series, we had the references of June, which was this. The June closed in a spike. So there was some initiative activity at the close of June. The last 2 days of June gave us a spike. So it showed us that some initiative buying is entered the market. So which is why we were ready for upside on the June, just as the June month started. So what we got in June is a trending move higher. So you can see in market profile, we give a lot of importance to the A period single. A and B are the first two periods. We call them the initial balance. So we have the initial balance at the first hour on the daily time frame. Similarly, we can look for the initial balance on the monthly time frame as the days. So the first 2 days, you can take them as the initial balance and see what they are showing you. So as you can see, it showed a buying tail. And as I said, I'll just take it down, and you can see this T and U, the last 2 days of June, which closed in a spike up. So it was very clear, and this was a very long-term level which we had broken out with an extension handle. We also have these extension handles which we follow in market profile. Extension handle is a zone where the market is given an initiative move away. It moves with such momentum that it does not come back to that level. So extension handles are followed on all time frames. We follow it on a 30-minute time frame, the daily time frame, the monthly time frame. So this extension handle is come on all time frames. So it is a very important extension handle throughout in the spot, because it was, I think, after a 2-year consolidation, we have broken out this level. We had multiple highs around this zone. So this extension handle was telling us, okay, the market is broken out on a very large time frame, so it is expected to give a good move. So which is what happened. You can see it is given a one time frame move. One time frame move. As I was saying, in July, we got this small A period single. And when we got this pullback, the E period, which was the 7th of July, I think, we got a pullback low exactly at that uh, low of B. So it is telling us that the buyers are defending this buying zone is being defended, and it resumed its upside, and it kept making higher highs. The value also was forming higher until we made this high. So I'll just give the date of that. And once we have this, we started with the A period single. And similarly, when we leave a tail at the top, this is a responsive selling tail. So the difference between responsive and initiative is like an imbalance is starting there. So the imbalance which started late in June went on till almost third week of July. So where we made this high. So this is the place where we left that responsive selling tail, because the next day we opened with a gap down. So this was very clear that the upside is done. The auction which had started the imbalance, the up move is done. And now we can either look for a balance to form again or a reversal. So this was the point where market profile was telling us that it is no longer a bullish scenario. Till here, we were like very easily looking only for going for long trades in the market. In live market, when we used to watch, we knew the value was forming higher on every day. So we used to look for more buy trades rather than short trades. And we knew we could hold the buy trades for a longer time, because the structure of the market was telling us that it is one time framing upside. So after it made this selling tail, it left this responsive selling tail, it kind of formed a balance into the close. So when we closed July, this was the references we had. The VWAP was at 19,600. So July was a trend up month. So the VWAP of that month was an important reference for us to hold. And the POC was at 19,430. And as we started the new series, on the expiry day, we make a note of what we call the rollover point. So the rollover point of August was at 19,818. So these were the three references we carried for the August series when it started afresh. So we had to watch these three levels of the series to get a point of what can happen in the series going forward. So now I'll just zoom up to the August series. So this is where we started the August. We opened right below that 19,818 reference. The first reference was the arrow point, although it was made in futures. So we do follow them on spot also to see in relation to the rollover what the spot is doing. So the spot left an A period selling tail here. So it was in total contrast to what happened in July. So this was telling us, the first day itself was telling us that it is not definitely not a bullish scenario, but we had the next reference at that 19,600, which was mentioned in the report. So this very second day, we broke that 19,600 level. And in fact, it was a trend day down. So it was very clear that the bullishness is completely over. And now, in fact, sellers have taken over. Because of this initiative selling tail we have got on the larger time frame. The monthly time frame is the biggest time frame we follow. So when the biggest time frame is telling you that initiative sellers are in, it is better to then change the perspective and look only for short trades. So after this happened, in fact, we had a very deep move, and July, the month, even though it trended for one part, the closing correction made it as an kind of a balanced profile. It was a double distribution trend up. So you can see there were two distributions. The first half, there was one balance which formed, and then we moved away from that and we formed a balance in the second half. So whenever we have a double distribution profile and it is not extending above the double distribution profile, what the auction does is fills up the low volume zone of the double distribution profile. So this also the concepts of market profile work on all time frames. Even on daily, we see the same things happen. So this was happening on the monthly time frame. So what this showed us, the fall, it got stalled. The third day, the fall, look at where it got stalled, right at the buying singles of the July series. So you can see how the market profile is showing us that the buyer, level where the buyers had entered is still being defended. So this E period low, which I had already spoken about of July, made a low right at the single, and this low of the third day of August again stopped right there. So this is telling us that the buyers are back here. So from here we gave a bounce, we gave a small bounce again, but it was not able to sustain the VWAP. And one more point to note here was this third day, it broke below the POC, which was 19,430, but it was not able to close above it. It closed just above the POC. So you can, so this was telling us, okay, there is some demand which is coming back. So now this pullback came here, and the high we made here was 19,645. So 19,645, we have something called as the failed auction in market profile. So as I said, the market profile concepts work on all time frames. So the failed auction is something which we look for on daily also and weekly also. So this 19,645 was a failed auction which was confirmed on the weekly time frame. What is a failed auction? I'll just uh, brief on what a failed auction is. We have in market profile, we have something called the initial balance, which is the first hour. On monthly, we take the initial balance as the first 2 days of trading. And on the weekly, we take the first 5 hours of trading as the weekly, the initial balance. So once the auction attempts to move out of the initial balance in one direction, so we look for a range extension trade. But if that extension is failed, that means it does not sustain and it goes on to break the other side of the initial balance. That is called a failed auction. On the daily time frame, the failed auction is measured on scale of like it should not have stayed outside the initial balance for more than 30 minutes. So, and it should break the other end of the failed auction. And on a end of day confirmation, it should close beyond. For example, we have an initial balance high and initial balance low. The market tries to go above initial balance high, does not stay above it for more than 30 minutes. And then it reverses and breaks below the initial balance low, and the close end of the day closes below the initial balance. So that is where a failed auction is confirmed. And it is a very important concept in market profile because it helps you to understand where you're having a change in polarity, and it gives you a nice swing position. This is, so here what we got was 19,645 on spot, confirmed a failed auction in the second week of August. So this bounce was getting stalled exactly at this VWAP. So this is where we again could make out that sellers had entered at the open. They may have booked out here because it was the buyer zone, and then they have come back in this zone near the VWAP. And anyways, it was clear to us that if that 19,600 is not holding, the buyers have lost control. So it was clear that the sellers were having control here, and it went on to make new lows. It went on to make new lows in this JTPO, which you can see. And what it did again was, even when it made new lows, it could not break below the singles low of the July month. So it was again telling that buyers, some demand was coming in there. So again, we had this bounce. We made poor lows here. The J and M you can see are poor lows. Poor lows are similar lows, and why they are made is they're showing you that the market is either getting too tired or the inventory is getting too short. If you're getting poor lows on the downside, maybe the inventory has got too short, and the market is showing signs of exhaustion, that the supply is got over and there is no more supply left in the market. So this again was a short covering bounce we got, and this bounce went up to 19,585. Again, it stalled right at that 19,600 level. So this again was a clue that it is just a short covering bounce, and we were waiting for the sellers to come back. And they did come back. And I'll just give you the date of that 19,585. So 19,584 was on 24th of August, where we opened higher and got rejected. So that was very clear that it is rejecting this zone and the supply is coming back. And we went on to make new lows for the month at the last day. So the last day, the low we made was 19,223 in spot. So in fact, we closed at lows. So this is how we close the month. I'll just... So now what we do after the month is closed is we look at how value is formed, what is the structure of the monthly profile, and what we can expect in the new series, which is the September month. So now this profile is almost completely inside previous profile, the July profile, which was a double distribution trend up one. It is formed value in the low volume. What I was telling, that whenever we have a DD, the low volume zone, the auction completes the low volume zone. It forms value in the low volume zone. So this is what it is formed. It is kind of a B-shaped profile. What is a B-shaped profile? B-shaped profile is a profile where you have a tail at the top and a nice balance on the rest of the body. So we have this selling tail from, I think, 1963, 678 to 795. So this will be our reference on the upside, which is the initiative selling tail on a monthly time frame. And then we have this value, which is completely inside July's value. And we have a prominent POC at 19,424. So 19,430 was the POC of previous month also, and it is kind of overlapping. So going forward, the three references which I had given you for August in the report were these. So now we'll be updating a report for the August month, where we will be having the references we take forward for the September month. So the VWAP of August is at 19,440. So I will put that in a report, but if you guys want to make a note, you can surely make a note of it. The POC is at 19,424, and the rollover point for September series is at 19,410. So what we have got here is three zones which are very close to each other. So we have a congestion zone here at 19,410 to 440. So this is a zone where the volume is concentrated as of now, and in September, what we can expect is a good move away from here, because August was more like a consolidation, and this consolidation, the filling up of previous profile, looks to be complete. And from here, we can have a good move away. So how we'll get it, when we'll get it, we will have to wait for further signals. We'll have to see how the first week of September develops, and if we are getting an initiative move, which is the A period single. So for now, we are watching that 19,430, and I think we closed very much in the same zone yesterday. The market opened lower, I think, and then we went back and closed in the same zone, that 19,410 to 440. So this is one zone which we will have to move away on the closing basis. And from there, we can see how it can give us a move. So we are expecting a bigger range month, because balance leads to imbalance and imbalance leads to balance. So that is how we follow in market profile, and that is what we see. And this again is true for all time frames. So when you have a balance on a monthly time frame, the imbalance it will be a bigger one. So I'll just shift on to the weekly charts. I'll show you, because so here you can see how we have formed overlapping value for the last 3 weeks. So when we see these on market profile charts, we know that the market is in a balance. We don't have a clear trend as such. So when it is in a balance, we will have to mark the zones, the upper end and the lower end of the balance, which is the value and the highs and lows, and then accordingly look for activity there. So when we get responsive activity around the extremes, we can look for a mean revert trade. And when we are in an imbalance, we will look for trading with the trend. So we will look for momentum and we will stay for longer time in that. And when we are playing for a when we are playing in a balance, we will be happy with smaller points, and we will know that the range, expected range, is also on the lower side. So this is how we watch the weekly charts. We see how value is formed on the weekly scale. So you can see the prominent POC of this week is at 19,330. We can see so many TPOs lined up here, and we have closed right here at that 19,422 level. So once we get a move away on the monthly chart, it will very obviously show a signal even on the weekly time frame. So this 3 weeks of overlapping value balance will also give a move. We will see a singles here. So finally, I am coming to the daily chart. So this is how we closed. This is the first day of the month, and you can see that we have had an A period single here on the daily time frame. So singles in A period are more important when they are coming near a new low. So, or at the start of a series, at the start of a month. So this A period single on the daily time frame is giving us a, yes, we are looking at the spot chart for now because we are discussing the higher time frames. So, but the daily analysis, the daily report goes on the futures. So the what we look at spot, have our levels marked on spot also. We have a weekly report which goes out, which has the weekly hypos for that coming week on spot. And then we have a daily report which is completely based on the futures, because futures is what we trade and futures is where we get the important series references. So in the daily report, we have the business areas. Those are marked in futures. So that is how we take our trades. So what is important to know what even the spot is doing, because it helps you to keep in check and be aware of any anomalies which are coming in. So coming back to the daily chart, now you can see we have one concept in order flow called the we have these 4 concepts in order flow: initiative buying, responsive buying, initiative selling, and responsive selling. So we look at trends in market. When there is a down move, the down move is stopped first by an RB, and then it shows that it is reversed by an IB. So RB plus IB is our signal that we can look for long trades. So we look for this not just on the order flow charts, even on the daily and the weekly and the monthly charts. So here, what you see here, we have left a small tail at the lows. This is a responsive buying tail, what we have left, and it is followed by an initiative buying tail. So this is giving us a clue that the market could have made a swing low and is ready for an up move. So this is just a clue. How will we get the confirmation is forming value higher on a daily time frame. It will start with that. Automatically it will reflect on the weekly and the monthly also. So this is what we look at in market profile. This is how market profile helps us to understand the structure. So as you can see, yesterday, first we have had this A period buying tail, which will be our reference. Then we have had an extension handle. This is again an important reference. So this extension handle is where the buyers have reconfirmed that they are controlling the auction after this initiative. And we have closed at the highs. So, but we will have to see that we have not been we have not moved away from that zone, the congestion zone. So we want one initiative move away, either an A period single or an extension handle at that 19,440 level to be more bullish. And once we do that, what will happen? We will look at going higher. So we look at the references on the daily chart. We had this trend day down on the 24th of August. So this will be our first profile we look at if we sustain above 440 in the coming week. So these are the extension handles. This is the initiative selling tail, which we had on 24th when we made that gap up at 585. So you can see how we use this and see. And the same thing if we see on the monthly, we have this value. So if we are trading above this 440 zone, then we are looking at this selling tail. 645, as I said, was also the FA we got in spot. So that will be one important reference we have. And then we look at this high of previous month. And then we will look at this responsive selling tail from July. On the downside, if we give an initiative move down below 410, and we have the zone of singles. We have the zone of singles, which will be a very fast zone. So that is why you could see how Nifty was falling and we were stalling is this zone. Almost, I think 4 or 5 times it tried and it took support at this zone. So, but if this zone gives way, I think I've mentioned that in the July report also, 19189, I think is the 19300 to 19189 is the buying single. So this is the zone. If we close below 19189 on a daily basis on any day this coming month, we can expect a fall of almost 200-300 points, because the next zone is that extension handle which we have at that 18880 level. So this is how we mark, and this is the responsive selling tail I was talking about, 19887 to 19991 on the upside, which will be a reference. So this is how I will be preparing a monthly report. I'll put all these levels again, so you can go through that once it is published. It is there on Slack. It is there on the forum in the on the website. It is anyone can read these reports. The monthly, weekly, and the daily reports are for everyone. It is not just for the WeTrender room members. So you can definitely go through them and make a note of these levels. These are all handy levels. We even have the weekly report. We also have the weekly settlement report. Quickly go through how we also have a weekly settlement report, which is what we do on a in the futures on a weekly basis, because the weekly cycle is from Friday to Thursday. The spot analysis is done on the calendar week and the calendar month, but this weekly analysis, the weekly settlement, what we have is done from a Friday to a Thursday. So we see what it is doing. So this is the weekly chart of previous of Nifty futures. And this is because now we are in the September series. This is the September series weekly profile. So as you can see, the weekly profile, we have formed a nice balance. And this is a neutral center, what we call in market profile. The weekly, the profile is a neutral center profile. And we have, I was talking about the congestion zone. So you can easily make out, you have a lot of HVNs. There are so many TPOs aligned over here. So we are looking for a move away from this, and we are expecting to get a good move away. In fact, yesterday we opened below this value area. We made a look down below it, but we did not get supply. And when you can see this, you have a small tail here at lows. This tail held. 19380 was the buying tail from recent 28th August, I think, and that held yesterday. That was showing buying on the daily time frame. Even in order flow, we got an RB right there. I think when Chai takes up order flow, he will show you that. So that is how we mix these things, and we get more confirmation, because when market profile is giving us a reference, order flow will support that reference, and we will know, okay, this is the direction we have to look for the trades. So we made a look down below this profile. We did not find any selling happening, and we made what we call the 80% rule. We swiped through this value and we went on to make a high, I think, of 19529 yesterday. So you can see where we have stalled. So I'll just show you this daily report. So this is where we stalled. This was the prominent POC of that neutral extreme profile. And I was talking to you guys about the failed auction, the FA. You can see this FA, which was formed on the 30th of August. So the 30th of August, the FA we got was telling us that the buying has got dried up and the sellers have taken over. So we were ready to take that move lower on the last day of the month. Our bias was to the downside. So this is how market profile shows us the picture, and we. So I'm sorry, I just closed the report. Yeah. So This is the daily report we have. We talk about what the auction has done. We have these important references. So you see the important monthly references zones are also mentioned every day in the report, because we follow them. The rollover point is here 410, and the FA which was marked at 542 is here. We completed the 180R objective of 19417. So if we remained below this 19417 level, we could look for the 280R objective, which comes to 19291. So this is how we look when FA is confirmed. Also, we'll track it on a daily basis. We see how it is behaving, the auction is behaving. For example, if we have been above this 1941 level, then we know that the FA may not give us that 280R move. For this 280R objective, the auction should form value below this level, which did not happen yesterday. So similar, and we have these business areas which are given each day for the both on the upside and downside. So these are levels which market profile gives us, and we watch order flow. That is the best. It is best actionable. These levels are best actionable when you can combine it with the order flow signals. Only then we will have a more better chance of it being a trade in your favor. So similarly, we have the write up about Bank Nifty also. The Bank Nifty daily chart, what all. So what I was talking about, the monthly thing, the Bank Nifty, these will be the important references. I'm sorry, this is not 44993, it is 44493. The VWAP of August series is at 44493. The POC is at 44550, and the rollover point is 44270. So even in Bank Nifty, if you can see this weekly chart, the tail is not seen here, but this weekly chart, the weekly chart had a small tail. And you can see Bank Nifty also was a double distribution week. So what we have done this week is just filled up this low volume zone. So the market profile shows us what it is doing, what the auction is trying to do, and we evaluate if the auction is doing a good job or not by watching the order flow. So now even in Bank Nifty, we have seen that the balance, the consolidation is kind of complete. And in Bank Nifty also, we can expect a good move going forward. The reports are free for everyone. As I said, the daily report, the weekly report, the monthly report can be read by everyone. The references can be used by everyone. We use order flow because we know that order flow is the best indicator we have, and the order flow charts we have at Wheatrender, I think, are one of the best I have seen, even better than what we used to have before when we were taking help from another service provider, and Shai was using the custom coded chart. But the same thing he's been able to do it in our charts thanks to Suyog and the wonderful team. We have a super Wheatrender chart section where we have the option suite, we have the market profile charts, and now we have the order flow charts. So we have a Wheatrender mentoring room where all of us sit together and take trades. We discuss the concepts we have, the setups we have. We have a training library which has 15 videos which has practical setups which we are using in live markets to take trades. So all of us sit together in the virtual room every day from 9:15 to 3:30. We keep discussing what is happening in the auction. We have a audio session at 10:15 for around 15 minutes where we discuss the open type, and then we discuss what could be the probable objectives of the day and what the auction is looking like. And then we are in touch throughout the live market, discussing and taking trades. Everyone puts in their views, and we also question if there is something which is not in sync. We do question what is the objective, what is the reason for that view. So Wheatrender trading room is where we all do this live trading. We have live commentary in moving markets, and we have this audio session, as I said, and we have a lot of queries which guys who are new to these concepts, new to the room, ask us, and we are happy to help, because Shai has been a best example of sharing and growing. He wants as many people who are interested in using this, because this is not something which is easy. You need to develop skills for this, and you have the best resources over here. So you join the Wheatrender training room, you have these things. You have dynamic learning, you have live market action, you have instant analysis. We have webinars like the one we are having now. There are many webinars which are only restricted to the room members. Not that we don't want to share the knowledge, but because they can relate to it, because we have been in sync throughout the week on live markets. And we have access to all the charts, because at times a market profile setup gives you a signal, but the order flow is not showing you the confirmation. So those are the times where we used to get hit before using the market profile setups blindly. So which is where order flow helps us to fine tune our entries and trades. So queries are addressed instantly. You have access to the moderators, and we reason out why the trade was taken, why a trade was given, why we are looking at small ranges, why we are looking at bigger ranges. So this is what we do at WeTrender. We would be happy for any of you who are not yet a part to come in and check out how we work, what we do. I'm also on Twitter. My Twitter ID is at Uttam Goel. I will be happy to help any of your queries. You can DM me directly. My DM is open. I also post these reports on Twitter. So you can have this thing WeTrender. You have the WeTrender handle also on Twitter. So whenever there is a report which is published on the website, there is an update done on Twitter. So you will get to know that the report is published. And we have a lot of reports which go out on a daily basis. We have the open interest analysis, which is done by my colleague RM. He's been doing this from ages. So we have a lot of such wonderful reports. So if you are a serious trader, these are reports which you can read, and they will definitely help you in trading. So with this, I will wind up. Thank you for your time. Thank you for listening in. And I hope you guys liked it. Any queries, you can DM me on Twitter. You can even post your questions once we open the floor. Thank you guys. And I would welcome Suyog, and who will talk about the technical aspects of the charts, because he's the man who is behind them. So we had few queries on the charting section. So he will sort them out, and he will. Thank you. My Twitter ID is Uttam Goel. I'll just type it in, and you guys can help it. Thank you guys. And over to you, Suyog.
Hey, Tom, thanks a lot for that wonderful presentation and crisp overview of what the markets are doing and what can we expect from it. Am I audible, everyone? So I'll try to quickly cover up some technical aspects on how to use these charts, how best you can utilize the features that there are available. We'll try to demo a few things which might not be very obvious when you are using these charts. So let's get on to it. And please, if my screen pauses or anything happens, please just quickly let me know, Uttam or Shai. So
yes, Suyog, I'll do. Thank
here.
you. Yeah.
Is my screen available? Sorry, visible to everyone?
Yes.
Okay, great.
Market profile chart. Yeah.
So yeah, we'll start with the market profile. So basic things like you have different options in the bottom section. You can explore them. We have tooltips which help you know which option is for what. And we can, I mean, the zoom and navigation is mouse based, where you can like simply look back into previous days. You can and there is this recentering option also, where you can quickly reset it and come back to the default view. We have a useful merge and unmerge select option as well. So you can simply shift select multiple profiles, merge them, get a composite value. You can select again, unmerge. This is also available on right click of this. So I'm not sure if a lot of guys already know this, hence just explaining this. Here we have a lot of options. Again, feel free to explore them. I'll just try to run this quickly so that we can get to the more interesting part that Shai is gonna talk about. But just wanted to demo a few things so that you guys at least know that the features are there, and you can also either explore, watch the demo video here, or check the user manual, or can also send queries to us directly at charts@vtrender.com, and we'll be happy to respond and address those queries. And there is also a right panel feature where you can right click and see its information, profile specific information on the chart itself. We have multiple view options, and before coming to that, I'll quickly first introduce our multi window view, where you can see different instruments side by side. If you want to, you can again zooming and panning here is like this. If you wanted to see an order flow chart besides an market profile chart, you can also do that. And okay, again, just quickly running through these features. Coming back to single panel, we have okay, again, we have a bookmarking ability also. So this helps when you have custom composites. You have merged a few composites, but when you reload, these composites are lost. But if you don't want to lose them, you can save this. And when you reload the chart, you will get that view as it is, as you saved it. So these are a few features which we have apart from a lot of things. So a lot of these things are also covered in demo videos, or if you can check our old webinars that we had, or you can also go through the user manual. There are a lot of things. If I keep speaking, there would be like even an hour would be less. There is so there is a bookmark option also, where you can like save and name your custom chart. So, and if you wanted to see those charts again, you can just look them via those links. So I guess just feel free to explore these options, guys, and let me know if there are any queries. We have a PPO based view, we have volume based view, we have a hybrid view. Moving on to order flow charts, just wanted to highlight one important difference, like between the zooming and panning. So here we have different zooming, panning on different axes. So the reason being, order flow is more about zone and numbers. So when we zoom and move our mouse within the chart area, it is always horizontal zooming and movement that is happening. But if you want vertical zooming and movement, you have to keep your mouse on the y-axis and then move it up, down, or you can also zoom it. So this is how the maximum zoomed out level looks like in our charts. Again, you can see the 30 minutes option, and you can see. So this is a little different than what we do in our market profile charts. So just wanted to highlight this in case you are not aware. Again, we have a few options in the bottom panel, and not to forget, we are continuously improving these charts as per your feedback, or as per general suggestions, or as per even our trading friends. Again, we have this multi-chart menu so that you can have you can view different instrument order flow charts on the same screen. And moving on from our basic market profile order flow charts, we have a suite of other options, layouts, and data. So we have the famous options chain, where you can also check out previous time data if you want to. And then there are series specific options. Just check these table out. We have lots of information here. And again, as said, you can check the demo videos or even the user manual. to find out more about these things. And if there are further queries, can feel free to ask. This is the Greeks table where you can check different option Greeks on the same page, the delta gamma values. And you can also extrapolate to a future date, just in case you wanted to see what the price or Greek of an option would be at a particular date time. And you can change you can do a calculate target, and it will show you the option prices on that particular date or even on a particular selected value. So again, yeah, feel free to use this and explore these. We have that index table. Again, index table, we have a futures view now that we have futures symbol, different types of information here. We have spot specific also here. We mainly do a very high level overview on different spot symbols. We have our famous spectrum charts. Again, feature wise, you can see a few days at a time, or during intraday, you can also see just intra-specific view. These charts are not, these are very short-term time frame charts, as these help us. I mean, these are very specific purpose charts and specifically tailored. These are not your long time frame candlestick charts. For long time frame candlestick charts, we have historical volatility charts. And these have lots of options. So for those of you who know about these indicators, who want to explore different traditional indicators here and different statistical values, can view these charts. We have OI chain charts, again similar, nothing different from technical point of view. We have our famous gamma charts, again bar charts. Here you can have series wise instruments. You can have date wise. You can go back in time and see what was the status of a particular options inventory at a given time, date time. So this is there. So a lot of these charts, I guess people are already familiar with these concepts. I'm just showing them, so in case someone was not checking, you can see we have all different types of options here, different settings. So if you want to see IV snakes, and along with a writer's cache. Writer's cache is like an inventory check on what the writers have on their hand. And not to miss that multi-window view where you can see these charts on a single screen, but you will need a bigger screen. That is a basic requirement. These charts are best seen on a bigger screen. So you can, if you have a small screen, you can do zoom. You can see the structure at least, and you can navigate to different charts. And here, if you want to see different other line charts, you can see them. There is a menu at the bottom. And okay, going back to the bar charts also. So here you have, if you wanted to see the gamma charts or inventory charts, so we have that as well. So yeah, yeah, you definitely need a bigger screen. But yeah, these are our most of the features that I have covered already. And in case you have any queries, any suggestions, any issues that you're facing, just feel free to email us at charts@vtender, and I'll be happy to respond and cover or even address these queries and issues. And hopefully I covered most of these. And as you guys also might be excited, I would like to hand over the baton to Shai and take this over and,
Suyog,
cover us. Yeah.
just before I come in,
Yeah.
can you demo that zooming, the horizontal and the vertical zooming for an order flow chart? Again, some queries have come for that.
Okay, I'll open up this, display the screen for some time. Okay, so this is how, so inside your order flow chart, if you do a simply mouse scroll up, down, it will be a simple horizontal zooming. If you click, drag the mouse, even if you do it up, down, nothing will happen. It will always be a horizontal movement. You cannot move it vertically as long as your mouse is within the chart frame. If you want to come back, if you feel you did something which you want to reset the view, so you can always use this icon. You can move this icon to a convenient location. If for some reason there is some issue and you think chart is behaving weirdly, you can always reset. There could be some things you can always report. And so this is the horizontal view. This is how it moves horizontally, but then you also need vertical view. So for that, you will have to go on the vertical axis, the y-axis, where the labels are listed, and you can see the cursor change here to a vertical mouse pointer. Here, if you do the mouse scrolling, if you just you call that scroll thing, it will zoom in and out on this axis, and if you click and drag, it will be a movement on the y-axis. So yeah, it's a little tricky initially, but once you start using these charts on a regular basis, it becomes easier and more intuitive. The reason for this approach was only, as I said, because we want to see, we do not want to lose the zonal focus. And specifically when we do when we are checking order flow, we want to see what is happening at a certain zone, and this allows us to do that. I hope that was clear.
Yes, thank you.
Sure. Thank you, everyone. Guys, thanks for listening in. And let's welcome Shai and let's hear to his views.
Thank you, Suyog, for that. And thank you, Uttam, for that good, explanation on structure. I hope everyone picked up points to explain and to actually, go through the market, for the rest of this month of September. I've just moved my screen and we have an order flow. And from here on, let's go straight, into order flow and talk about how best, we can utilize the information from the charts. So what we are basically, saying over here is that the market has got a structure, and this structure is actually, nothing but the demand and supply of the market. And not everybody is an intraday trader, right? So not everybody trades that 3-minute time frame. There are people who take positions for 1 week, which is a weekly settlement, and there are people who trade that monthly settlement via stock futures and all, and then stock options also. And then there are investors, people who invest for a 1 year, 3 year, 4 year, 5 year. So we say always that the market is a sum of many parts, and there are many things which come together and constitute what is a market. Now all that happens in the market is described in 2 words, and one is demand and the other one is supply. There is nothing else in the market besides these 2 words, demand and supply. And the demand, which is visible in that 1 minute time frame of yours, or even that micro 1 minute, that 10-second time frame, 30-second time frame, is what constitutes the market, because that will show up in that 5-minute bar chart, that will show up in the 30-minute bar chart, that will show up in your daily chart, that will show up in your weekly chart, that will show up in your yearly chart also. It all begins, okay, in that very small instant when that buy order is executed or that sell order is executed. So what we are doing in order flow is we are zooming in into the micro picture of the market, and we are trying to really, okay, come down and understand what the market is doing at the micro level. And that's basically order flow for you. It's putting the market under a microscope and trying to see what has happened with the market entirely. So the way, okay, we look at order flow is it's not just numbers on a chart. We look at order flow as a sum of 5 different parts. So the structure, the imbalances, the clusters, the zero prints, the responsive and the initiative buyers. This is what is the entire order flow for you. And we've tried, okay, to cover these aspects of order flow in this particular screen over here, in these videos over here. Short videos, not more than about 4 or 5 minutes each, but they are designed to talk to you about what is order flow. So what we are trying to say over here is order flow is not just understanding the number on a screen. It's trying to see, okay, what is, okay, behind that number. And this is the reason why it takes a little bit of skill to understand what is actually happening with the demand and the supply in the market. So if I have to break down this tool called order flow and talk to you about what the order flow is, it is essentially a function of the market liquidity. Then, okay, it's got to do with the COT, the open interest, and we consider that as one piece of info and we plot it below the bar. That's the only piece of info which goes below the bar, and I'll try to explain. Then, okay, we do the RB, IB, RS, and IS. And then, okay, we look at volume clusters and then finally imbalances. Now, if all of these come together, and it's very rare, okay, that they all come together, you get a perfect trade. And what do I mean by a perfect trade? A trade, okay, which is going to give you an 85 to 95% probability of success. But in all conditions of the market, not all 5 of them have to play at the same time or come together at the same time. No, it's, if you take an analogy of cricket, there are 5 batsmen. And if all 5 of them bat at the same time and score hundreds, okay, you get a 500 plus score. And one of them fails, okay, then, okay, the team total is not really up to the mark, right? So here, okay, what we are saying over here is that you don't have to look at all 5 of them, but when all 5 of them come together, and you have a chart, okay, which shows you all of them working together for you, you will have the most perfect trade possible. So when we see a situation where the elements of the order flow are coming together for us, we try to maximize in that trade. We try to put, okay, maximum, okay, to get an output from that trade, and that helps us, okay, in our sizing also. Right now, what are these things? Okay, so I'll no particular order. Okay, let me start, okay, with the first big one, which is the COT, the COT. The COT is basically the commitment of trade. That means it's the commitment of all the people who have traded positions in the market. Now, this particular one bar, let's say, okay, this was at 3:24 p.m. yesterday, and it had a COT reading of 140. It's from 19,522 to about 513. It's a 10-pointer, and the volume of that is 2470. These are all numbers in contracts, by the way, guys. Okay, so you can see, okay, that the Nifty numbers are smaller, but if I had to go through an option contract, the options, okay, I've definitely got higher numbers and higher volume also. That's about 7,000 odd contracts, okay, over here. So what really has happened over here in this particular bar, the price has moved from about 184 to 178. Now, is this the entire market? Not at all. Okay, so when you're looking at COT, okay, most people who are new to order flow will just look at this one number and they will say, okay, the market, okay, moved from 184 to 178 on this COT. But COT of a 3-minute bar is not the entire market. So if you're looking at a 3-minute time frame where I am in right now, And if you have to understand the COT, you have to look at the COT as a sequence flowing through at least for about half an hour. Okay, so look at the last 10 bars of a 3-minute chart, or zoom into a 30-minute bar, and now, okay, see the commitment of trade over a period of time, right? So if I was to look at this particular instrument, and this is the 19,300 CE, and I just focused on this number COT, here, there was a lot of selling, and suddenly, okay, the market changed gears, right, from this 142 level, and I can look at this COT over here as 1305 through, and progressively, okay, the market is not put that kind of selling over here till there was some profit booking over here. And this tells me that there was a little bit more buy side interest coming in. So it's a 30-minute bar, and the COT, the commitment of trade in this bar was on the higher side. So look at that COT over there as a function. Now this is the only information we wanted to look at below the bar, because the whole purpose of order flow is not to look below the bar. Okay, it's not to look at elements below the bar, but this is just information for you to understand what is the trend of the market. And instead of looking at the full bar, what had happened, you're looking at this entire sequence, and you can make out, okay, it was with sellers, and suddenly, okay, buyers took over, and this was the change point which happened. Right now, there are other elements to it, and I'll just quickly talk about the open interest and the DOI. So instead of particularly in an options chart, instead of focusing on another open interest table or opening up another pane or opening up another tab, you can, okay, look at the change of open interest right over here. Now this particular bar, this particular setting on a 30-minute time frame is very, very useful on the settlement day on Thursdays, and it's going to go to Tuesdays and Wednesdays and Thursdays. So if you're drawing up your option charts, you don't have to now go into a separate OI table and look at the change of open interest. You can see the change of open interest here. So this was the total OI up to this bar, and the change of open interest is coming over here. So if a call is showing covering, it will show up in reds over here. And okay, you would see some reds over here, especially on a Thursday. This works perfectly, right? So you don't need to open up, okay, separate tables for this. Now this is COT and OI, and that is just one constituent of the order flow. The remaining constituents of order flow are all within the bar. And that is where, okay, we want you to place your focus on, because where you place your focus is where you place your energy. And that's where, okay, the trading, okay, happens. And the entire demand and supply is here, right? So a question, okay, which comes to me, okay, when I'm talking to people about COT is they ask me, okay, why not delta? Why not cumulative delta? Why don't you have delta, and why don't you have cumulative delta on your charts? Now, there are various theories out over there about how it works. But my personal observations, when I was trading delta and I was trading cumulative delta, I did not get a lot of positive results while watching delta below the charts. Now, these are my personal observations. It did not work for me, to be very honest with you. But the thing about delta is, particularly, okay, in the scope of the India market, the NSE in which we trade at, delta was a concept, okay, which was introduced in about 2001, 2002 when order flow was first launched, and the team, okay, which was doing order flow at that point of time, they ran a massive advertising campaign just to promote, okay, this factor called delta and cumulative delta. And they did this campaigning, okay, for about 5 or 6 years, and they promoted delta as order flow, and order flow is equal to delta. A lot of participants are still in that campaign mindset, and they are going, okay, and referring to that advertising which was done, okay, for delta and cumulative delta. Then that was about 15 years back. But what has happened subsequently is that the trading world is changed, and one of the bigger changes, okay, which has come is something called an order slicing software. So I'm not sure, okay, how many of you are very well aware of how it works, but basically, to split it down for you, let's say, okay, you're a very big trader, and we are used to tracking big traders on our order flow charts. And suppose you have to execute about 10,000 lots at one go. Now, okay, there is a limitation. Okay, that's about 3,600. Okay, for the Nifty. Sorry, 36 lots for the Nifty, 1,800 quantity to be going in one shot. But the slicing software what it will do is it will take that 10,000 and will break it down into bits and pieces. So that one big trader is not visible on the charts, or at least in that particular one order, which is why most of that order becomes a resting order, and it is available to go either limit or market depending on how the slicing software works. There is no final word on that, whether the orders get executed at market or they get executed at the best available limit price over there. Now, this defeats the concept of looking for aggressive buyers and sellers, because most of that big order is now broken down and is not available to you as a market order. So we've moved away, and we felt that moving away was the right thing to do. So we have introduced something called the commitment of trade, which over a period of about 5 to 7 to about 10 bars works better for us. Right now, that was about COT and OI. But the bigger thing you need to look for in the order flow numbers, of course, the buyers come on the right and the sellers come on the right. A lot of novice order flow traders, they would focus only on this particular bar, on one bar, and try to draw a conclusion or an inference out of it. Now, that is not the recommended way to look at order flow. Even though this bar is giving you a lot of information currently, this information is relative to what has happened previously, right? So don't look and exploit a scenario for yourself based on one particular bar and a developing bar in order flow. All these numbers are related to what has happened previously. So look at context, CONTEXT. And the best way to look for context is to understand what is happening in the current bar vis-a-vis what has happened previously. Right. So if a market was dominated by sellers and an initiative buyer came, that initiative buyer could be somebody who was a seller earlier and has closed those positions. So we tend to say that after a series of IS initiative sellers, if there is one IB bar, that IB bar could be a result of shorts covering. So look for two of them, IB plus IB, kind of a pattern, and now that will tell you that there is extra demand coming into the market, right? At the same time, when you're looking at imbalances, we like to look at everything in terms of clusters or group of them coming together. So if you are just focused on the imbalances, a few of them coming together will tell you quickly that now, you don't have to be really looking for another bias. Now, this is what we call a trifecta. 3 or 4 of them together, and these are powerful signals. They will tell you that the market is now shifting phases and it's going from the supply side to the demand side. So you see a trifecta over here in imbalances, that about 3 or 4 of them together, and they are virtually there's no actually supply which is controlling them. Now they are telling you that there is a market which is going long. Now this is an option chart. If I zoom down lower, over here also, there is a seller at the top in this CE, but down over there, there is demand. So all this is building up, a sequence of it, 1, 2, 3, is telling you, that the market is shifting and is not getting supplies. The market went back over here. You could see, that there were 4,000 and 6,000 contracts, but they have not come back over here, right? There is actually, no supply, which has come back at this level. So this seller was not interested in adding supply over here. And the buyer saw it a little while later, not at 130, but about 5 or 10 points higher, and he's added demand only because the supply is not there, right? So what you also look for along with imbalances are what we call the zero prints, and I've covered that over here. And these explainer videos, there is something which we call the zero print, and if you go through that in this market liquidity, the zero print is telling you whether there is more demand and there is more supply in the market. And every time you see a set of zeros, that will tell you that supply is gone off, and the reference for that and the context for that is these previous highs. So all this selling was there, it's gone now, and now you can safely enter a buy side trade. You may not be confident initially to enter a buy side trade here, But when you see these imbalances shoot up over here, now, okay, you can get into that long trade. You may not get it over here, but you definitely, okay, can get it up over here, and the market, okay, still rewarding you right up to about, even if you enter here, that's still a 20-point winner for you right up to about 175, 178 levels, right? Now, the truth about order flow is, it's not a holy grail. It is not a system which is designed, okay, as a mechanism which is be all and end all. There are no holy grails in the market. A lot of traders go out and look for holy grails and indicators and templates, okay, which tell you, okay, that this is 100% certainty and this is going to work like that. Nothing in the market works 100%. But what I want to tell you over here is what worked for me in order flow is I found my holy grail inside me. The holy grail is not outside. The holy grail is always inside you, and it tells you what you should do when. Now, this information, when it is coming to me, okay, that there is a buyer dominant over here. Now, okay, can I upsize? Can I, okay, instead of trading, okay, my normal 2, 4, 10 lots, suddenly, okay, go in for a bigger size because I know, okay, that the demand and the supply, demand is outstripping the supply, which is available over here. I used to be the trader who could not really trade size at one point in time when I started my, because I was scared. And I was scared, okay, because I had made a lot of losses initially, and that past, okay, was always there to haunt for me. And for a long period of time, I could not really upscale. I could not really, okay, go higher in contracts because the confidence to enter those big sizes was never there. What if the market goes against me? But when I started reading the information from the order flow correctly, and I started, okay, seeing these cluster buyings happening, the IBs, RS, etc. Now that told me, yes, okay, now I can upsize. And if you want to understand, okay, what the holy grail of trading is, the holy grail of trading is you moving from 2 lots to 6 lots, 6 lots to 18 lots, to 18 lots to 36 lots, and upsizing over there. That is the only holy grail of trading. When you can upsize confidently based on what your system is telling you, that is the actual holy grail of market. And capital can easily be made over time only if you are in a position to upsize, only if you can go and increase all the time, okay, your quantities and your numbers and the way, okay, you look at market, you keep increasing them, you can. But to increase, you have to have confidence, right? You have to know, okay, that this is what I am doing is right, and this is what is going to work for me. And that confidence comes only, okay, when you can see that the rest of the market is there with you. For me, it worked that way. I could see, okay, that there is more demand with my call. So why not, okay, add size and go higher up on that call? Or I could see, okay, that there is more supply, okay, with my put. So why not add size and go, okay, with the rest of the market? Because the wisdom of the market, along with my trade and my bias, is what makes everything right, right? So look out for these clusters. Look out for signs of those zeros. The fourth factor is the volume cluster, the largest point of control, the POC, where it is in the bar. So ideally, for a bar which is going up, I like to see the POC at the bottom of the bar, and I like to trade if price is above the bar. So this is the way we use our volume clusters. This by itself is called a volume cluster because this particular zone is the largest concentration of this bar. Okay, and you can safely say, as a rule of the market, that buyers are stronger above this volume cluster and sellers are stronger below the volume cluster. So every time you see price above the POC, now, okay, you're more confident to take that long trade. And then, okay, you're seeing, okay, this imbalance comes up, you add it to your confidence to take trade. So look and identify volume clusters. So a simple math over here will tell you this 3,000 on the sell side and 3,945 on the buy side. That's a net of about 39 and 33. That's about 772 over here. If you quickly zoom in the rest of the bar, there is no 7,200 lots traded on any of the other routes. So the math is done for you. This is what we call the volume cluster, and it's not just one row, it's about this entire sequence over here. So that's 3824 and 5803 over here. That's 1352, 2498 over here. So this entire pocket is what is called a volume cluster. And as a rule, if you buy above a volume cluster, a call or a long future, you have more chances of being successful. So when you see this volume cluster over here right at the top, okay, and the market is below the volume cluster, now, okay, you're no longer into that long trade. Right now, okay, you know, okay, that you can move out because all these buyers were right. And this particular buyer is upside down 1346 and the POC is moved up. Now, okay, you don't have to buy until and unless price goes up above 190. So this was a trade, okay, we were in for a very long time. Yesterday, we were at 19,300 CE and we were expecting actually 208 on this CE yesterday, and we had brought it down about 140. But the minute I saw this 1346 come up and the demand, okay, moved to zero higher above him, I knew, okay, that this particular trader was upside down. The demand bar went to zero. We quickly, okay, moved out of our position at about 188, 187, 188, and that was the end of our move. And it was also close to 3 p.m. And it was right, okay, to go out of that position because the demand side had dried up over here, right? So always look for volume clusters. And then you can look at a series of RBs and IBs and RSSs and IS. So basically, okay, what we are saying over here is initiative sellers. Initiative sellers are traders who are buying aggressively in the market and creating a bigger move of price. So you can best visualize them in a 3-minute time frame. And you will see. So whenever, okay, you see an initiative buyer coming in, you will see a sudden increase in prices because these are dominant aggressive buyers which are coming into the market, right? So if I were to look at these particular bars where the IBs, okay, showed up, this is, okay, what we call an IB pattern. And two of them together is a very strong pattern, IB plus IB. And you see two of them now, okay, you got evidence even in that 3-minute chart to go into a long position at about this level, 145, 156. You may take it at 160. There's another IB come over here, but IB plus IB is telling you that the market is now driven more by demand than by supply. So a few of them, if you can bring all of them together and look for all of these patterns to show every time in an order flow chart, you can have everything, okay, working maximum best for you. So we deconstructed a lot of these factors which I just spoke about to you, and I'll recommend, okay, that you go through these, the imbalances, the clusters, the zero prints, the responsive versus the initiative, and the structure. And these videos explain everything you need to know about order flow. We have stripped off all the elements and we made it, okay, a one-click access for you, okay, so that you get to the information faster. Right now, all this does require skills. Okay, it is not something, okay, which you are gonna get good at in about 1 day or 3 days or even, okay, about 1 week or even 1 month. Levels of understanding are different for different people. Everybody trades at their own pace. Everybody learns also at their own pace. Now, I do not know how long, okay, you would take to learn this, but you have to learn this as a skill set. This is not the same thing as watching an open, high, low, and close. This is about understanding and learning how to adapt it at the same time. And I'll be honest with you, it's going to take time. It's not going to be something, okay, which is going to happen overnight for you. So yes, okay, that application is required and that skill set needs to be developed. And the faster you develop it, the easier it will be for you to move ahead with your account in the market, because this is it. There's nothing more to the market than demand and supply, right? So we understand that, okay, I've traded, okay, order flow for a large number of years, and we understand, okay, that it is a skill, okay, which requires development. So what we've done is we initially introduced this course for you to understand about what market profile is, what Uttam spoke about, and order flow. We've covered about 12 videos on this. Now, this is you can say an investment in your education. And to be very honest with you guys, there is a 90% failure rate of traders in the market. And about that 90%, if you really go and zoom in and find out, why they have lost, 90% of them, out of that 90%, almost 100% of them have no knowledge about markets. They do not have skills, to take on a market which is dominated by the big funds, the big traders, the big institutions. They come in and they move the market, according to their whim and fancy, which is of course, also a strategy for them, right? We do not have an understanding of them, which is why we tend to go and trade with them or alongside them, and sometimes even against them. And we end up losing because they are armed with the skills, they are armed with the strategies, and we do not have them. So the only way you can get better at trading is to develop an understanding, is to develop an idea about how markets move and how to identify where these traders are operating and where they operating. Believe you me, if you do not invest yourselves into education, into understanding the markets, it's going to drain out for you. It's not going to be a pleasant experience for you. So we've started out on this e-course, which is a series of about 12 videos. And in these 12 videos, we talk to you about what is the market profile, what is the order flow, and how it goes on further, and how you can understand all that needs to be done about seeing how the market structure works. So I'll encourage you to look up this page, the eco section, and there are 12 instructive videos over here which will walk you through each and every single thing. This course content is about 3.5 hours roughly, and the details are at this link, eCourse, and it's a one-time investment for you to understand all that the market wants to do. Right, the entire package is about 4,999 plus taxes. This is a one-time access fee, and the course is for you for life, but it will give you a very clean idea about what the market has to do and how best you can monetize the information from the charts. We also have the VTrender mentoring room, which is more suited for the active trader, for the trader who trades every day in the markets. And Uttam took you through this, but here we give you access to all of the VTrender charts, and we give you access to the trading library of strategies. So these are about 16 videos and more in-depth videos, a little bit more deeper than what we have even in the e-course, and we arm you with strategies to go out and make the best out of these markets. So if you feel this is for you, I'll encourage you to go and look at this. This is for a more serious trader, more active trader, and we have about 3 plans. This is about 19,999 all inclusive, 49,999 for the quarterly and annual. You'll get the platinum access to VTrender charts, free access, and you'll get free access to the trading library to arm you to take on the challenges of the market. And yeah, look up that forum section also, where we are posting a lot of reports for you. Post up on the forum section. You can look up at all these articles, where we've tried to decode the markets for you, try to understand what it is, because principally if you look at it, guys, it is a very tough marketplace, and it's very tough to make a lot of money in the markets, because the other people who are trading alongside you are well armed. They know the business inside out. They have all the skills required to make the maximum out of this market. So you should be at least adequately equipped. You cannot beat them, but at least you can be as good as them. You can join them by making sure that you have the right knowledge to take on the best in the business. Right. So with that said, I'll open the floor to any questions. If anybody has any questions, I'll be happy to take them. Feel free to ask your questions, or you can send them to the mods also, and the floor is open. We'll take your questions. So the question which is coming is, how do you use IB and IS when we get IB and IS? So it's very simple. An initiative buyer an initiative buyer comes in, okay, there is demand coming into the market, right? So when an IB comes, okay, if you are having a call short, okay, this is the time to walk away. Okay, the IB is always against call writers and the IS is against put writers. And if you zoom through these charts and go back, okay, to what has happened, there are a number of incidents where you can see, okay, that these kind of things are there. So you change your bias when you see an IB and an IS. If you have a position open, if you don't have a position open, when you see two of them, now is the time, okay, you get into a long position, assuming you got at about 160, your stop loss is going to be the low of the previous IB. So about 140 stop loss, and you take, okay, whatever, okay, the trade gives you. My belief is your next trade is one brokerage away. Okay, now today is the day and age, okay, where brokerage rates have really come down a lot, and you have to be active and in the market at all times. Your next trade is only one brokerage away. So whatever the market gives, don't let it take it from you. So if you got a trade of about 160 with a stop loss of 140, if you get about 175, 180, take it, because okay, you got okay something okay with a higher probability 1:1 ratio. If you get okay 190, 200 on this, good. But eventually over time, okay, you will get to take this trade. You will learn okay how to take this trade right here when these people come in around this volume cluster. You will get to know okay that this is the time okay you get it. For this, okay, you'll require a little bit more knowledge about order flow, but once you get that, okay, it's a very well managed trade at about 150, say about 135, 140 stop loss, and you can go on with that. We take these kind of trades very often in the VMR, and we show you okay how to do it. It's very easy to demonstrate this in a live moving market. In fact, okay, there is a video okay which we have on YouTube, and I was live, okay, I think it was on Wednesday when the market was dropping down, and there were a lot of ISSs coming in, and I was very clear okay that put option okay was going to a certain price, and it moved exactly to that price. Yeah, this is the 3-minute chart. We work okay with a 3-minute chart and a 30-minute chart. The 30-minute chart is an idea about structure, and the 3-minute chart will tell us what is going on. With order flow, you don't want to really okay go too low with a 10-second or a 10-tick chart, and you don't want to go too high, because okay then the edge is lost. You just have to go at that correct level. For us, okay, the 3-minute time frame works the best for order flow.
Hi, sir. This is
Yes.
Ajit.
Yeah.
Sir, I have one doubt regarding the sourcing of the data.
Okay.
So this is actually a very good the thing which you mentioned that about the confidence, whether to enter now or not. That is a phase which I am in. So I know the structure. I mean, I can see there is certain discretionary trades that are happening, but I do not know whether to enter or not. But this order flow is definitely going to help. But my thing is, if the source of data which if the data which you are sourcing for your software, if that gets anywhere restricted in future, then I'll be left handicapped after several years of experience or being relying on your order flow charts. Someday, for some reason, if that sourcing stops, then I'll be like little handicapped, because for many years I'll be only looking at order flows. Now suddenly that gets stuck, or for whatever reason. So that is why I'm curious to know, like from where the data is being sourced, or are there any chances of that data being restricted in future from SEBI or so on, any other licensing requirements and all? That is a part which I'm little curious to know, sir.
Okay. Now regarding okay, what is going to happen in the future? Tomorrow, okay, we all will die. So there is no guarantee, okay, that we are even okay living okay tomorrow. But I have been trading order flow for about 15 years, and I know okay that National Stock Exchange is a very serious place, very serious okay about the kind of business which is doing. The exchange is not gonna shut down. About the market, I know okay that the market is also not gonna shut down okay anytime soon. So as long as the market is alive, the exchange is alive, we as traders are trading, everything is fine. About the future, there's no guarantee about what can happen tomorrow. So you think okay that Somebody can tell you, okay, in 1 year's time, okay, nothing is going to be there. There's going to be a nuclear war. Okay, in about 2 days' time, everybody is going to be dead. Everybody is dead. So what can you do about it? That's not okay, something okay, which is there in our control. So as far as okay, everything is there, okay, in our possibilities, the exchange is running, the market is working. We are here and we've been trading okay for about 15 years. We are not somebody who started about 3 days back. Yeah,
Okay.
so I hope okay that answers your question.
Yes, sir. I have one more question if I'm allowed to ask.
Yeah, sure.
Sir, recently I came across this new concept. I'm very new to this learning process. So I recently came across this, I don't know how to pronounce it, gun numbers or GANNWD gun hypothesis. So so according to that theory, they say it always moves from number to number. So there are several numbers or values or levels. The price will always keep changing or moving in those between those numbers. So only at certain levels or certain those numbers, order flows will be in a position to help us to whether it moves beyond it or it is going to come back. So in your experience, have you seen this happening in this market profile? Like it exactly halts or pauses at those gun numbers as well?
Yeah, of course. So that is a basic truth of the market. I don't know okay which name okay you referred to, but we have okay something called the POC, which is the point of control, or which is the largest volume concentration of the bar. And this is not rocket science, or it's not something okay which is created okay in I know like an invention kind of a way. This is the truth of the market, and everybody knows that when the market trades at the largest volume concentration, price tends to stop. So about the market, okay, you need to know two things. Price can either probe, that means okay, it can move directionally away, or price can rotate. And we look for areas okay where the market rotates, and that gives us trade setups by itself. And the best way to identify those areas are what we call these POCs. So these yellow clusters which you see here, these are the POCs. They are the largest volume concentration of the bar. And if you want to zoom out further, you can have a market profile chart open where you could see these things show up okay on these pink bars. They are the largest volume concentration of the day.
Okay. Yes,
any other questions, guys? Let's give a chance to others also to ask questions.
Sai sir.
Yes.
Good afternoon, sir. This is Yogesh Sharma.
Yes, Yogesh.
सर साईं सर ये अपने फ्यूचर्स के सभी चार्ट पे भी ये ऑर्डर फ्लो अवेलेबल है ना अपने इसमें सिस्टम में?
सभी फ्यूचर्स चार्ट्स के लिए अवेलेबल है. इफ यू आप ये मेनू में देखेंगे तो यू कैन पिक अप एनी चार्ट. सो इट डिपेंड्स ओके ऑन द पैकेज यू चोजन. सो दिस इज कोलगेट पामोलिव. इसका ऑर्डर फ्लो चार्ट भी अवेलेबल है. अगर ये एनएससी का फ्यूचर है तो आपको यहाँ पे भी दिखेगा, सब ऑप्शंस दिखेंगे. यू कैन गो इनटू दिस मेनू ऑप्शन ओवर हियर. आपका ऑर्डर फ्लो सब ओके यहाँ पे दिखेगा आपको.
तो आपका जो प्रीमियम प्लान में दैट इंक्लूड्स एवरीथिंग ना सर, ये जो 5000 वाला जो प्लान है मंथली का?
सो वी हैव 3 plans. One is okay a monthly, one is a premium, one is एक तो एक फ्री एक्सेस है, एक तो एक प्रीमियम है और एक प्रीमियम प्लस है. तो प्रीमियम में आपको अगर स्टॉक्स चाहिए तो आपको ये एड ऑन चूज करना है, और आपको ऑर्डर फ्लो चाहिए तो आपको ये एड ऑन चूज करना है.
Okay.
So this will okay give you your this thing. If you remove the order flow, this is about 1180 with GST, और आप ऐड करते हैं तो फिर okay it becomes 4720 per month.
अगर मैं ऑर्डर फ्लो फॉर ऑल एफएनओ लेता हूं तो 5000 टोटली 7080.
Yeah, this is okay the order flow for all stocks. And ये pricing page है, ऊपर आपको ये सब information आपको मिलेगा. You have the option to go half yearly and annually. Annually पे आपको 2 months off मिलते हैं.
Okay, got it. Thank you sir.
Welcome. Any other questions, guys?
Hi Chief, Gautam here. I had a question.
Yeah, Gautam.
This was regards to execution using order flow. So would it be better to look at futures and look at the clusters there, but eventually when, let's say, I'm taking the trade via an option, would it be better to look at the option chart? So if it's better to look at the option chart, then how do you hold a trade? For example, in the 19300 CE, if you look at the 30-minute chart, there was a candle with 3 green clusters, and then there was a candle with 3 red clusters. But if I was looking at the red clusters and exit, subsequent 30-minute candle, the option price went higher. So how do you hold on? How do you tackle this situation is my question.
So what we do know, Gautam, for us, even though the option market is the bigger market, and in terms of the numbers, okay, you can easily make out, okay, with the futures chart and the options chart, even for one particular instrument, there is no comparison. The option chart of that instrument is about 40 times to about 50 times bigger in terms of numbers. But having said that, the bigger traders are always in the futures charts. So if you look at your network today, or even if you're on Telegram or Twitter or even on your WhatsApp, and you ask, okay, a local community of traders who are saying trading alongside you, and you ask them, when is the last time you traded a future? And they will tell you, okay, we never traded futures. We're all trading options. So the question over here is, then who trades futures? And the answer is the big money. So if you want to track, okay, what is actually happening by the big money, the answer is always going to be the futures chart. So for example, the Nifty will not give you the volume, but whatever is there on screen, you can safely assume that there is no retail interest over here, or there is marginal retail interest over here. So keep a futures chart open to get into a trade. So this cluster, okay, was coming up over here at about 19,485. This was your second indication to go long in that. And then, okay, all this red over here imbalance, okay, was your signal to go out. But even before that, this futures chart, okay, was telling you, yes, okay, that this is a buy side opportunity, which is opening up around 19,465 over here, and you can get in. So keep a futures chart open. Parallelly, if you're trading in the money, okay, you can always take an in the money call option of the contract open. I like to keep both of them side by side. So I have, okay, Nifty on one side and about 19,300 on the other side. And when both of them are matching, giving the same signals, then you're getting into a perfect, okay, trade situation for yourself. So keep both of them open. See here, okay, there is clear evidence by the big money, okay, that they were booking into the highs. There's a big sell side cluster coming up over here. Here there is not. So the big money, okay, when it is leading in the futures, is telling you, okay, that the market is done now and it may drop down. In fact, okay, there was a 30-point drop which came, okay, after the appearance of all this sell side cluster. Just, I hope, okay, that answered your question. Keep both your future and your option open on one screen and try to see it from the same time frame.
Okay, so follow-up question, Chief, if I have the permission. So let's say you're using this as a trend following mechanism. Now, let's say you want to capture 300 points in Nifty, let's say from 19,300 to 19,600. Now, can I use, or has this been done before by you? Have you tried? Just want to know. Let's say 19,300 to 350, I look at the 19,300 CE on my right-hand screen. Then from 350 to 400, I look at the 350 CE. I just keep moving up in terms of the CE that I follow towards the right-hand side. Does that work? Would you recommend doing it?
So if you're looking at about a 300-point range in the Nifty, now that is something, okay, which happens over the course of 1 week. So that's about 5 days of trading, okay, for that about 300 points. That's the ATR, right? So it's about 180, 200 points in a day. So if you're expecting a 300-point move, you have to give the market a little bit more time. It's not fair to expect, okay, a market to give you about 300 points in the course of one session. So you'll have to be a little bit more giving in terms of your stop also, because the market is not just going to probe, it's going to rotate also. And by rotation, it means it's going to come down a bit also. So if you're looking for a trending kind of a structure, let's just say, okay, you're looking at order flow. If you're looking at a trending kind of a structure and you got into a position somewhere around here, 19,460 odd levels, your stop loss is going to be somewhere low at the previous demand zone. Or you can move your stop loss to this and you can stay into this trade as long as there is no big selling coming into your market, which takes out this particular caught over here at about 1571. So if you don't see, okay, that there was a partial booking over here, but only about 562, you can stay back into that trade because, okay, the caught is not there. So if you're a positional trader, you would still okay, have a stop loss around here at about 19,455 levels, and look to see if the market is now placing demand above 19,525. Once okay, you know okay that this supply is taken out and you see a big cluster of greens come up over here, then okay, you can okay put a stop loss back around this 19,510 zone and ride the next leg up. But you would also get a bigger idea about it in the market profile chart. So try to use order flow to time your entry and exit. If you're looking for